More money every Wednesday here on the news, and today we've got our financial advisor Elaine Beadle in studio talking about investing in the stock market. Elaine, always great to have you here.
Thanks.
So I wanted to start with this fact. The stock market has averaged a return of nearly 10% every year over the last 20 years, but look at this. This study by J.P. Morgan reveals the average investor, the average person, has only earned an annual return of 2.5%. What's going on?
Well, let me talk about that first. When we talk about the stock market and you're investing money in year one and keeping it there until year 20.
Right.
So you're right, the U.S. stock market, 9.9%. The international markets, 5.4%. And even U.S. bonds had 6.2% over that time period.
Right.
So why 2.5%? Well, it comes down to people make the wrong decisions at the wrong time. And we let our emotions get involved, and that's how that happens. And so there's a whole new area of study actually called behavioral finance. And it looks at the human psychology of what makes us do things and overlays it with finance. Try and help explain why investors make irrational decisions.
So you've mentioned a few of the things, but what are investors really doing wrong here?
Well, a couple examples. Think about if something negative happens into your life, what do you want to do? You want to fix it.
Exactly.
So, for example, you scrape your arm, it's bleeding. Your first reaction, I got to stop the bleeding.
Yep.
Well, think about that. That's your natural instinct. But think about that from an investor perspective. You've got your investments in the stock market. It's getting a little choppy. It starts going down. Your portfolio starts losing money.
Exactly.
I want to stop the bleeding. So what do? You sell out. And you're selling out at the absolute wrong time.
Right.
You know, another thing is herd mentality. You know, you hear something on the media about, a great company or a hot product. You hear somebody talking at the office, oh, I've invested in this company, I've made a lot of money. And suddenly you get that feeling of, I'm a little jealous here, I've got money sitting, I should be investing, I better get in and invest. And suddenly, whether or not it's really a good option for you or not, you put your money there. Other people put their money there, the price goes up even if there isn't a value. And so those are the kind of things that really hurt investors when it comes around to trying to figure out what to do.
All right, so I've got about 30 seconds left. What should investors be doing then?
Well, I know it's hard to do, but take the emotions out of investing. And I always say start with the plan. So put an investment plan together that really reflects what you need your money to do for you. And if it's going to go in the stock market, make sure you can leave it there at least 5 years. And then just try and get away from that. And if you can't deal with your own emotions.
Don't get in.
Well, that or hire an investment advisor who can help you because they know what the market does. They can take that emotion out and they can help you get a better return than that 2.5%.
Always good advice from Elaine Beadle, a friend of the show here and our financial advisor on WTHR.com.